Why Warren Buffett never invested in Bitcoin? You'll be surprised why. Stay until the end to find out everything. But before starting the video, like and subscribe to the channel so you don't miss anything about Warren Buffett and finance. Warren Buffett, widely regarded as one of the greatest investors of all time, has been famously skeptical about cryptocurrencies, especially Bitcoin. Despite Bitcoin's meteoric rise in value and growing popularity, Buffett has remained steadfast in his position. He does not consider Bitcoin a productive asset and has publicly expressed his disapproval of investing in it. Understanding his perspective requires diving into his core investment principles, which have guided his success for decades. Buffett's investment philosophy centers around value investing, the idea of purchasing securities that appear underpriced relative to their intrinsic value. He focuses on companies that have solid fundamentals, consistent earnings, strong competitive advantages, predictable cash flows, and competent management teams. These companies generate real economic value and, over time, reward shareholders through dividends and capital appreciation. Bitcoin, however, does not fit into this mold. Unlike a company, Bitcoin does not produce earnings, generate cash flows, or have a tangible intrinsic value. It is a decentralized digital asset, a form of digital gold, as some call it, that derives value largely from scarcity and speculation. Its price is driven by demand and supply dynamics, market sentiment, and investor enthusiasm rather than fundamental economic activity. Buffett often describes Bitcoin as a speculative asset or gambling. He has stated that investing in Bitcoin is not investing in a business, but more akin to betting on the price going up. He famously said, "It's a mirage basically," and added that it does not produce anything. This view highlights a fundamental difference between traditional investing and the world of cryptocurrencies. Furthermore, Buffett emphasizes understanding and staying within one's circle of competence. For decades, he has built his fortune by investing in industries he deeply understands: insurance, consumer goods, railroads, and banking, to name a few. Bitcoin, as a novel digital currency with complex technical foundations, lies outside Buffett's area of expertise, which may contribute to his cautious stance. Security and regulatory concerns also play a role. Cryptocurrencies operate in a relatively unregulated environment, exposing investors to potential fraud, theft, and market manipulation. Buffett has expressed concerns over the lack of oversight and the potential for misuse. His investment approach prioritizes safety and predictability, which contrasts sharply with the volatile and uncertain crypto landscape. Additionally, Buffett's investment timeline is typically long-term. He prefers businesses that can sustain competitive advantages over decades, providing steady growth and income. Bitcoin's future remains highly uncertain, with unresolved regulatory questions, technological risks, and adoption challenges that make its long-term prospects difficult to assess. In summary, Warren Buffett's decision not to invest in Bitcoin is grounded in his value investing principles: skepticism toward non-productive assets, focus on understanding his investments deeply, and preference for stability and predictability. Though Bitcoin has attracted many investors worldwide, Buffett remains unconvinced about its suitability as a long-term investment. Another important aspect of Warren Buffett's critique of Bitcoin revolves around its lack of intrinsic utility and purpose as a currency. While Bitcoin was initially created as a decentralized digital currency to facilitate peer-to-peer transactions without intermediaries like banks or governments, its practical use as a medium of exchange remains limited. Buffett has pointed out that Bitcoin's volatility and transaction inefficiencies hinder its ability to function effectively as money. Traditional currencies like the US dollar have widespread acceptance, government backing, and are relatively stable in value. This stability is critical for currencies to serve their purpose as units of account, stores of value, and mediums of exchange. Bitcoin's price swings are often extreme, sometimes changing by double-digit percentages in a single day, making it unreliable for everyday transactions or as a stable store of wealth. Moreover, Bitcoin transactions can be slow and costly. The Bitcoin network processes a limited number of transactions per second compared to established payment systems like Visa or MasterCard. During periods of high demand, transaction fees can spike dramatically, further reducing Bitcoin's usability for small or frequent purchases. Warren Buffett, with his deep understanding of economic efficiencies, likely views these shortcomings as significant obstacles. Buffett has also emphasized the problem of speculation and hype surrounding cryptocurrencies. Many investors are drawn to Bitcoin not because of its utility but due to the fear of missing out, FOMO, and the hope of quick profits. This speculative mania can inflate prices beyond reasonable levels, creating bubbles that may eventually burst. Buffett has consistently warned against investing in assets driven primarily by hype rather than fundamental value. Another factor is Bitcoin's environmental impact. The mining process that secures the Bitcoin network requires massive computational power, resulting in high electricity consumption. This environmental concern has attracted criticism worldwide and raises questions about the sustainability of Bitcoin as an asset class. Buffett, who is known for considering the broader impact of his investments, likely factors this issue into his overall skepticism. On the flip side, proponents argue that Bitcoin offers unique advantages, such as decentralization, censorship resistance, and the ability to transfer value globally without intermediaries. Some see it as a hedge against inflation or as digital gold. Despite these arguments, Buffett's investing style tends to avoid such abstract or ideological assets in favor of concrete, proven businesses. Finally, Buffett's historic success with traditional investing provides little incentive for him to embrace radically new and unproven financial technologies. His approach focuses on what he knows works, buying undervalued companies with strong fundamentals and holding them for the long term. Bitcoin, in contrast, represents a break from that paradigm, rooted more in technological innovation and speculative potential. In conclusion, Warren Buffett's refusal to invest in Bitcoin stems from concerns over its practical use as currency, volatility, speculative nature, environmental costs, and departure from his core investment philosophy. While Bitcoin continues to grow and evolve, Buffett's stance reminds investors to carefully evaluate risks and align investments with solid fundamentals. In addition to his philosophical and practical concerns, Warren Buffett's perspective on Bitcoin reflects his broader approach to risk management and capital preservation. Buffett is famously risk-averse when it comes to investments, emphasizing the importance of protecting principal and avoiding permanent losses. This mindset contrasts sharply with the high-risk, high-reward nature of Bitcoin and cryptocurrencies in general. Buffett often talks about margin of safety, a concept popularized by Benjamin Graham, his mentor and the father of value investing. The margin of safety principle means investing in assets that have a significant buffer between their market price and their intrinsic value, reducing the risk of loss. Since Bitcoin has no intrinsic cash flow or earnings, determining a true intrinsic value is nearly impossible, making it difficult to apply this principle. Moreover, the extreme price volatility of Bitcoin presents a significant challenge to risk management. Investors who buy Bitcoin must be prepared for severe price swings, sometimes losing or gaining double-digit percentages within days or even hours. Buffett's investment style prefers stable and predictable returns, which align better with businesses generating consistent profits. Buffett also values transparency and governance. When investing in companies, he analyzes their management quality, competitive position, and regulatory environment. Bitcoin, as a decentralized network, lacks centralized leadership or regulatory oversight. This absence of governance can lead to uncertainties, vulnerabilities, and the potential for fraudulent activities. Additionally, Buffett has voiced concerns about the speculative mania around cryptocurrencies encouraging reckless behavior among investors. He fears that many retail investors are being drawn into highly speculative assets without fully understanding the risks involved, which could result in significant financial harm. Buffett's role as a respected figure in finance makes him cautious about endorsing such investments. Another angle to consider is Buffett's view on innovation and technological change. While he acknowledges the importance of innovation, Buffett is selective about investing in technology companies or disruptive innovations. He prefers to invest in businesses with a proven track record and clear business models. Bitcoin, as a relatively new and rapidly evolving technology, doesn't fit neatly into this framework. Despite Buffett's personal stance, it is worth noting that his investment partner, Charlie Munger, shares similarly strong skepticism towards Bitcoin. Munger has called Bitcoin rat poison and dismissed it as a speculative bubble. Their joint viewpoint underscores a consistent philosophy that values tangible assets and proven business fundamentals. In the end, Warren Buffett's decision not to invest in Bitcoin is not a dismissal of the technology's potential but rather a reflection of his prudent, value-driven investment strategy. For investors inspired by Buffett, the lesson is to focus on assets with intrinsic value, understand what you invest in, and prioritize long-term capital preservation over chasing speculative trends.